and welcome to the Logistics Management Podcast Series. My name's Jeff Berman. I'm Group News Editor for Logistics Management Magazine and also the Peerless Media Supply Chain Group. Today, it's a real pleasure to welcome Scooter Sayers to our podcast. Scooter serves as the Business Development Director, LTL Solutions at Cubiscan, a leader in freight dimensioning solutions. Scooter spends his days speaking with shippers, carriers, and 3PLs to deploy solutions that maximize revenues and profits, minimize costs, and optimize systems. Following a 25-plus year career at ABF Freight and ArcBest Corporation as a pricing analyst, progressing through several positions, including Director of Rating and Traffic Services. In this latter role, Scooter held responsibility for 100 employees in the corporate office, as well as the weighing and research team spread across the ABF Freight network. He also developed the LTL industry's first density-based tariff back in 1993. Scooter also spent 3 years in the 3PL and freight broker space with several companies, and then subsequently formed Sayers Logistics LLC, an LTL transportation consultancy focused on delivering LTL solutions by working with shippers, carriers, trade organizations, 3PLs, and technology providers to help move the LTL industry forward. Scooter graduated from the University of Arkansas with a Bachelor of Science in Industrial Engineering and also an MBA. He and his wife and his cat named Princeton currently reside in Northeast Georgia. Scooter enjoys running, the outdoors, barbecue cooking, supporting the special needs community, as well as following his beloved Arkansas Razorbacks. Hey, Scooter, welcome to the podcast.
Hey, thanks, Jeff. Great. Glad to be here with you.
Yeah, absolutely. So just to get things kicked off, Scooter, when we look at the less-than-truckload market, the LTL market these days, how would you sort of define the current state of things as they stand at the moment?
I would define it as cloudy, unstable, and lacking of visibility. It seems like every day there's a different story that kind of hits the headlines about, what's going on in LTL. So just a lot of uncertainty right now.
Yeah, that's to say the least. Absolutely. With that said, Scooter, it's kind of there's a uncertainty has been a big buzzword within the logistics freight transportation landscape. From that perspective, how do you think shippers should be viewing or approaching the market at the moment?
We've had an ongoing downturn for quite some time, and I think I, amongst other people, have been predicting the upturn for so long that we think it's bound to happen, and it will eventually happen. But it's a prolonged downturn, and I think there's a little bit of nervousness taking place right now with the carriers. Not that I would really recommend going out there and trying to work hard to get a better pricing agreement. But I think it is a great time for shippers to really make their carrier partners know who they are and what they can do, and just to work to get a better arrangement overall, not just pricing, but how can we work better together? You're struggling, I'm struggling. How can we work together better with all of this uncertainty so that we can strike a mutual beneficial relationship improved upon what we're doing today? I think there's great opportunity to do that right now.
Absolutely. The topic of shipper carrier collaboration truly never goes out of style to be sure. Um,
Mhm.
Shifting gears, Scooter, over to service. What do you think shippers can expect in terms of service, say, over the course of the next year? And as a follow-up, what about the current state of LTL service as well?
I think service is good. I think it's always a challenge in a downturn like we have, where the carriers are trying to manage cost. They're trying to provide the best service and maintain their profits at the same time, and that's hard during this downturn. But I think that with YRC closing, I think it really kind of helped level set everybody to realize that good quality service in LTL is table stakes. You've got to have that to succeed long term, right? And I think everyone is looking at their Mastio scores. I think everybody is very conscious of their service levels. They know as an LTL carrier that for me to be able to charge a premium price to continue increasing my profit margins, I have to offer service that my customers find value with. If I'm not offering service and getting my flywheel spinning with the service component, I can't make the other pieces of that flywheel work very well.
Understood. And you had just mentioned Yellow's exodus a while back, Scooter. Looking back now, because obviously there's been a chunk of time since that occurred. What do you think have been sort of the subsequent, I guess, impacts of their exit for such a major capacity provider, given all their terminals, dock doors, assets, etc.
Mhm.
What is how do you, I guess, a look back? Looking now compared to when it happened, have things kind of fallen into place, so to speak, within the LTL market when we view it from that count? I know obviously a ton of the
Mhm.
real estate has been acquired, for example.
Yeah. Mhm. Well, it's fascinating because they went out of business. It was coming approaching, I guess, 2 years now.
Yes.
But when you look at the market, I mean, the carriers, pretty much uniformly, except for like Knight Swift, AAA Cooper, that is really expanding geographically. The carriers are down. Their tonnage is down. That's with them having acquired, their pro rata fair share of the YRC business. So it just goes to show you the extent of this downturn that, pretty much everyone is down tonnage wise, shipment count wise, even though they benefited from the YRC closure. But I think one thing that's really helped out is, especially for a number of carriers, it's allowed them to really rejigger their network. They've been able to acquire new properties to
Hmm.
really optimize their line haul network, right? So they're more efficient with their line haul, and they're closer to their customers. So I think we've seen a lot of investment in terms of getting these YRC properties, some of which were in great locations, fixing them up and just optimizing their network. So I think that when the market finally does recover, we're going to see a couple carriers that really invest in their network. They're really going to thrive from the groundwork that they've laid.
Okay. Yeah, that's promising. Um, Shifting gears over to pricing and rates, Scooter. How do you sort of view the current state of LTL pricing? Is it where is are rates and pricing where they need to be at this current point?
I think the LTLs are still doing a masterful job with the hand that they have, right? They just have so much more pricing power and finesse and yield compared to their truckload brothers. They're still doing a great job there, but this downturn is really starting to wear on them. I think that some of the carriers during their earnings calls, they will talk about the contractual renewals and where they stand. Maybe Carrier X says that we secured a 6% rate increase on our customers in this last quarter. What they're not reporting on is how those rate increases hold up over time. So they talk about what they just secured, but I think with this downturn, I think we're really seeing carriers putting in a rate increase, and let's say it's 6%, but then they immediately start getting pressure from those shippers about reducing it, or
Hmm.
I may need to go pull my freight and go somewhere else. And so that retention, which has been very strong for the last couple of years, I think it's really starting to flag a little bit right now. And I think that's putting pressure on the carriers to maintain those increases.
No doubt about it. And sort of a separate but related, and especially it sort of speaks to the sweet spot over at Cubiscan. What do you think in terms of in what ways is technology impacting pricing as it relates to things like dimensional pricing, as well as the hot topic of AI and other methods as well?
Yeah, well, I think that the carriers have deployed a lot of dimensioners from us and from some of our competitors. It's allowing them to really understand their customers. They know their customers' freight better than most of the customers know their own freight themselves. It allows them to really dive down on a granular level and understand how to set that pricing up to drive the profits they need, to price the freight, to get what they want and price up the freight that they don't want. So that's what's really helped the carriers out with managing their profit levels and optimizing their networks and getting the business that they want, is just really understanding what covers customers are giving them. And I think with the NMF changes that are taking place now, it's really starting to push that need of securing that shipment data earlier into the process where the shippers capture it. And that just helps everybody out because the carriers want the data and they're capturing it themselves today largely. but they really want that data as soon as they can get it. And they prefer to get it from the shipper rather than them capturing it themselves, a day or two after they pick up the freight. So we're really seeing this drive towards granularity of what each shipment looks like, because that's what drives carrier cost. It's space is what really matters for the LTL carriers. They got to know how big a pallet is to know what that cost is going to be and what the price should be.
Yeah, for sure. And you had just mentioned the NMFTA changes, the pending changes. Could you just
Mhm.
please provide the audience, Scooter, with sort of a top level of what's going on, what the key changes are, and also perhaps an update on the timing of everything?
Mhm.
Again, on the top levels, I know we could probably spend the
Yep.
whole podcast about that.
Yep. Mhm. Yeah, yeah, you're right. We could dive deep and come up a week later and still have, things to cover, right? But
Right.
in,
Yeah.
in a very yeah, in a very simplistic sense, the NMFC guide that's driven classifications for decades, it's historically been driven off the type of commodity being shipped. Is it a widget? Is it a sprocket? And density is often covered with a proxy, like is it made of plastic or metal? Would drive the class. It gets very subjective with a process like that, where you're arguing over, is it a widget, is it a sprocket? You think it's a widget, I think it's a sprocket. What they really realized is that from a carrier standpoint, the carriers don't really care that much these days about what you're putting on the pallet. They care about how big is the pallet, how much does the pallet weigh, and so what we're seeing is a really big push towards density being the overarching driver behind classification. And you've got to know your pallet weights and dims to know what your density is, which then drives the classification. So they're taking a big step forward with big changes effective July 19th, I believe.
Okay.
They're basically canceling thousands of items and they're rolling them all up into these density tiered type classifications where the density drives the class. And we're just going to see a progression of this taking place over the next couple of years until the NMFTA is done, kind of redoing the entire classification process to where density finds its rightful place.
No, absolutely. It's definitely a major, major undertaking, and that seems to would clearly benefit the sector in general. Um,
Mhm.
so let's move over to I guess a bit of a current event phase of the podcast, if you will, Scooter. And obviously, the first tariff in our business, the first tariff. See, it's that much on my mind, right? Um,
Mhm.
what do you think the impact of the administration's tariff objectives, specifically as it relates, I guess, to Mexico and Canada, could or are having on LTL and domestic and cross-border trucking?
I don't think it's really having that much of an impact just yet, other than we're seeing imports kind of slowing down. I think that long term, I think there's a lot of positive there. I think there's a lot of momentum, a lot of belief that we were going to be seeing some nearshoring taking place over the next several years, and I think this is going to accelerate it. But it just takes time for that to happen. You can't just snap your fingers and open up a new manufacturing plant in Mexico or Canada or in the U.S. It takes time to do that. So I think the stars are aligning for LTL being in a really, really good place from all this. It just is going to take time for it to get there.
Yeah, I mean, it doesn't it sort of stand to reason that nearshoring would be a real net positive for the LTL sector?
Absolutely, absolutely. Nearshoring, the e-commerce trends of getting items closer to where the consumer is, all of these things just are lining up really well for LTL. The pundits, especially on Wall Street, when they look at the various modes, pretty much across the board, they look at LTL as the one to push your chips towards if you're thinking about modes like truckload or rail or intermodal. They're like, put your chips towards LTL. That's where you're going to see the profit and the value growth in the next 5 years or so.
Okay. Okay, understood. And there's obviously been a bit of talk, a bit of speculation, and actual news, to be honest, about Amazon's LTL presence or increasing LTL presence. Earlier this month, they
Hmm.
announced an LTL offering for inbound shipping, in which it will offer LTL services to customers shipping inbound to Amazon facilities. Um, now, it's my understanding that that service has been around in different, going back, I believe, maybe 5, 6 years, but this seems like a more formal announcement or rollout. There's also been speculation that maybe they will grow through acquisition as well on the
Mm,
LTL side. Obviously,
mm.
again, pure speculation, but how do you sort of view Amazon's LTL presence and where they're at now and where where things may be going?
Yeah, I agree. I think it's something that they've been doing for a while, and in a lot of ways, it's really no different than what Walmart or Target or any major retailing firm is doing, where they are trying to control and manage their LTL spend by consolidating freight and moving it truckload as far as they can, and then distributing it from an endpoint. I think they're just doing the same thing. I think they are investing more in the process and opening it up to where they can control more of that business. And I think there a lot of LTL carriers don't like the Amazon business. It's really difficult deliveries. You're trying to get a window time delivery to go deliver freight to one of their fulfillment centers, and there's a million other trucks waiting in line to get in. So it's a real pain. And so a lot of carriers don't want it. So you've got a mixture of carriers that don't really play that much in Amazon space, and you got carriers that do a lot of it. It's probably 2 to 3% of the total LTL market, right? So some carriers probably don't care what Amazon does because they don't want the freight anyway. But I think they need to be concerned because if Amazon is able to pull some of this in somehow with their own network and pull it away from the LTL carrier market, even if I don't haul their freight, my competitor who does may now be looking for more freight because I just lost Amazon business. So it's got a chance of moving the needle a little bit if they actually do pull some of this in within their own network. It just remains to be seen what they're really going to do and if they truly have the infrastructure to do that. They did not buy any YRC properties, so I'm just not sure what infrastructure they have or will have to really move the needle here.
Right, absolutely. And by extension, and Amazon, putting Amazon aside, Scooter, how do you
Mhm.
sort of view M&A activity within the LTL sector? Obviously, there's been a couple deals in recent years, regarding Knight,
Mhm.
AAA Cooper, I believe it was DHE not long ago. Um, just to name a few. How do you, I mean, is obviously a growth through acquisition strategy is key, especially within LTL, where it's famously difficult to just start an LTL company, given the terminal costs and
Mhm.
network requirements, etc. So with that as sort of a backdrop, how do you view all that stuff?
I think we're still going to see some M&A. I mean, right now with how the market is pounded, just about every publicly traded company. I mean, valuations are down. So if you want to buy an LTL carrier, now's probably the time to do it, right? You want to buy low, sell high.
Yeah,
But you got to have the capital to go be able to go do that. I think that I think that Knight Swift still has that hole in the Northeast. I think they're going to fill it one way or the other. I just don't see how they can really do that organically by opening up terminals. I think they're going to have to go buy somebody to help be the at least the starter seed to get the Northeast going. So I think that's going to be one thing we'll see in the next year or two. I still think that T-Force Freight, with some of the chatter they had about possibly buying ABF, and now they've kind of pulled back and said we're not going to do anything major until maybe 2026. I think that's
hmm
going to be on the table at some point. To me, it makes sense for the two largest remaining unionized carriers to join forces one way or the other. I think they actually will need to do that to really be able to survive and thrive, competing against their non-union peers. And then I think the next thing, as far as M&A to look at, is any of the big regional carriers. I think if you're a smaller regional carrier, you got to be a little concerned about your survivability in this market. Because the bigger carriers seem to be the ones thriving right now. And so I think you're going to see maybe some of the larger regionals um, gobbling up some of the smaller regionals. And we've seen some of that. We saw Pitt, Ohio, Dorn purchasing Sutton not
right.
too long ago. I think we're going to see more of that taking place as far as M&A activity.
Okay. All right. Absolutely. And Looking ahead, Scooter, you can't help but notice all the news about declining imports uh, due to the ongoing tariff situation, et cetera. How do you sort of view the peak season prospects as it relates to the LTL sector from a carrier perspective and from a LTL shipper
Mhm.
perspective as well?
Mhm. Yeah, it seems like I've been around LTL for quite some time, and there really was a peak season in LTL long ago. You would see, the months of September, October, even November be really busy months. It seems like these days in LTL, there still is a little bit of seasonality as you go from quarter to quarter, but there's less of that, and you really end up having, 2 months like January and February that kind of operate on their own as weak months, and then all the other months are, they're all kind of equal, more equal than they have been. So I just don't see that much of a peak season in LTL anymore. But I do think that if we can get this tariff mess settled out, I do think we're going to see a resurgence of imports, a resurgence of manufacturing, and I think that it's going to be a peak-like season for LTL possibly maybe in the second half of this year. There seems to be some belief that if we can get the tariff stuff settled and move on, that it's going to be a nice back half for LTL. So we'll see how that goes.
Okay, yeah, for sure. Two more quick ones before we wrap, Scooter. Um,
Mhm.
and this may be a tough one to answer, but I'll throw it out there anyhow. How do you think perhaps the LTL market could look a few years down the road? I originally had the question as 5 years, but I'll lower that to say 3 to 5 years.
Mhm.
I know that's a bit hard of a question, just given all the ongoing uncertainty at the moment. But if you were to
Mhm.
take a stab at that, what would you say?
I think that we're going to see some, a lot of it depends upon when we see a recovery take place and what that looks like. I think there are going to be some clear winners when that takes place. And I think some of those winners are going to be the ones that are really investing in their network. I think we're going to see, the strong getting stronger and the weak getting weaker. I think that's going to be one thing we see over the next couple of years. And I think that the pricing side is evolving very rapidly. I think there are just a lot of changes with the NMF updates taking place that we're gonna see more change in how LTL pricing works over the next 3 years than we saw the previous 30 years before that.
Oh,
So those are the
okay.
two things that I'm looking at.
All right, great, great. And just lastly, Scooter, what advice would you offer up for LTL shippers, given sort of the current state of the market at this point?
Yeah, again, I really do think they need to be having those conversations with their service partners. Whoever they're turning to for service, whether it's a carrier or a 3PL, I think they really need to be working with their partners to do that deep dive on what is it about my operation that you don't like? What is it about my operation that you do like? How can I change how I operate in order to find better pricing from you, better favor from you? So that I can manage my freight spend better. The market's going to turn at some point. The industry is going to turn, and the carriers are going to be capacity challenged. And I think as a shipper, you don't want to be caught in a situation where your carriers are having to make decisions on who they pick up freight from. You want it to be an easy decision. You want them to pick you because you're the partner that they want to work with, and you're just going to get better favor and better pricing in the long run by doing that. The carriers are really understanding the cost to serve customers individually, and they're going to price that way because it's what they want to do to optimize their network. So help your carrier, help your 3PL optimize their business, and they're going to help you optimize yours, and everybody can win.
Yeah, that's great advice. All right, Scooter. Well, look, it's been a pleasure having you on today. On behalf of Logistics Management and the Peerless Supply Chain Group, I just want to offer up a huge thanks for spending the time with us.
You bet, Jeff. I sure appreciate it. Look forward to seeing you in person soon.
That's right. See you out in Utah, Salt Lake City, late June at the SMC3 Connections Conference.
That's right.
And for those in the audience who would like to keep up with Scooter, he's got a tremendous presence on LinkedIn. I strongly recommend it. Simply just go to linkedin.com/IN/Scooter Sayers, followed by one more backslash. And for those of you on Twitter, please go ahead and feel free to give us a follow, simply at Logistics MGMT. And if you're not signed up to our podcast, please go ahead and do so. Just search for Supply Chain 24/7 wherever you get your podcast, and it will pop right up. And give it a follow. Thanks, everyone, and have a great day, and we'll talk to you soon.